My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Well, we've got an old friend back for another interview. Eliav Kling is a multifamily real estate investor based in Canada. The last 4 years, though, he was living in the Cayman Islands and does most, if not all, of his investing in the good old US of A. So that's kind of a roundup. Canada, Cayman Islands, USA. Sounds interesting. Eliav, welcome back to the show.
Oh, thank you for having me again here on the show. I'm happy to be back.
Well, I think it's been 3 or 4 years, so time flies, my friend. So give us a little update. Let's have a snapshot. What do you invest in? What does the portfolio kind of look like these days as of 2025?
Sure, with pleasure. So we're still investing in multifamily properties in the U.S., currently focusing on mostly Sunbelt states, anywhere between Texas to Florida and, everything in between.
Yeah.
Looking also on some opportunities in the Midwest. Cash flow is better over there, so it's a different business plan.
Yeah.
But yeah, that's the overall in terms of location.
How many different projects or communities are you involved in at the moment?
We currently have about 3 or 4 properties. The last one that we acquired was the largest by far. We bought a $95 million property in the Miami MSA.
Nice.
That was a challenging project, but very successful one. So that's one. This one is going very well right now.
Excellent. How many units is that one?
260.
Nice. It's a big one. Yeah.
260 plus 4 commercial spaces. So it's a nice asset. It's a brand new building.
So Eliav, are you and your wife taking these projects down all by yourselves? Are you working with a team? Are you co-GPs on these deals? How does it typically look?
Yeah, so we've co-GP'd obviously on this one. We needed someone with deeper pockets that will be able to sign the loan. We partnered with Presidium. It's a large Texas-based company with tons of experience, and we're running the show together. So we're lucky and grateful to have them.
Yeah,
on this one, and on other ones we have other co-GPs.
Yeah, makes sense. So when you're doing a co-GP deal, typically the different general partners have different kinds of responsibilities. What is your primary responsibility as a member of the GP team?
So my background is I'm coming from the tech space, and I've used to do mostly project management stuff, large implementations in the telecom industry, and I'm bringing my skills from my IT project management into the real estate world.
Nice. So
my forte is operations and large rehab projects.
Okay.
So, for example, we just completed a few months ago, a refi on a Houston project where I used to basically I did the project management for the rehab. I've done that. I've done it multiple times. So it's interesting to combine and bring skills from one line of work to other.
Yeah.
But that's my that's my strength.
Are you able to do most of that from a distance, or do you have to kind of go be boots on the ground on location a lot as well?
So when there is a rehab project, obviously you need to be on the ground or have someone that you can trust. On that specific project, we split that between myself and another partner. So each one of us was there at the peak every probably six weeks. One of us was there for a few days.
Yeah.
And we also had another partner, which is our property manager, and she was able to help out as well.
Very nice.
So it was a teamwork.
Yeah, that's the best way to do it. So, Eliav, it's been a while since we last chatted, and during that time, especially the multifamily real estate market has gone through a lot. The prices got radically overinflated with the buying frenzy that happened a few years ago. Then high interest rates and insurance rates and all this kind of stuff, and property taxes and all this kind of stuff just kind of hit the fan. How did that affect you guys, if at all?
So it's an interesting question because we actually stopped buying properties in 2020.
Okay.
Well, the reason for that was not because we didn't want to. We wanted to. It just didn't make sense financially.
Yeah.
And when
that analytic brain of yours was going, the numbers aren't making any sense.
No, because listen, I mean, if you underwrite it at 3% interest rate, yes, it does make sense. Mm-hmm. But I knew that those interest rates will not sustain themselves. So when I was underwriting at plus 2% from whatever I could get back then.
Yeah.
And on some properties, it was about 3 to 3.5. So I was underwriting at 5 to 5.5. Mm-hmm. And if the numbers didn't work, we just passed. And that saved us from getting into problematic investments. Mm-hmm. I think I'm very happy that we didn't buy anything.
You and your investors.
And our investors also are thankful for that.
Yeah.
And when the time was right, in 2023, we got our first acquisition after 3 years that we didn't buy anything.
Yeah. So that you had to be patient for a long time. That must have been aggravating as hell, I would imagine.
It was, and we questioned ourselves during that time. Are we doing the right thing?
Because you see everybody else buy, and people throwing money at them and all this craziness going on. Is very tempting to kind of, put that conservatism aside.
Exactly. It wasn't easy, but we're thankful to be a very small company. Mm-hmm. And we're not, we don't have to buy. To keep the lights on, we don't have to, like big companies, they to keep the lights on.
Yeah.
They need to acquire, and they're, being fed from the acquisition fees.
Exactly.
In our case, it's not, this is not the reality. So we don't have to acquire to sustain ourselves. And it appeared to be a very, huge advantage comparing to the larger firms that had to continue and buy.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Yeah, mostly. Well, so then that brings up the question, Eliav, what is your exit strategy with your properties? What's your plan?
So it depends. It really depends on the property. Every property is different. We normally hold for 5 to 7 years, but there might be opportunities that will be selling, after 3 years. Mm-hmm. You always try to time the market, but you cannot really time it perfectly, obviously.
You have to be a little flexible there, give or take a year or two.
Exactly. You have to be flexible. You have to be creative. You have to listen to the market.
Yeah.
And even if it's, even if the property didn't perform as you wanted it to perform, but you feel that it's the right time to sell, you better communicate that to the investors. And sell at a maybe not at the peak performance, but it's better than selling after the peak when everything started to go down. Well,
yeah. Now what's been going on over the last couple of years is a perfect case study for you to say we want to sell before that happens, right? That's
Exactly. And we're capitalizing on that right now. We're seeing properties at prices that no one could think of, 3-4 years ago.
Yeah. Yeah, it's coming to a head for sure. So Eliav, as we're kind of wrapping up our conversation here, I wanted to ask you, it sounds like your role as a co-GP, it has a lot to do with project management because that's your natural skills. Quite often co-GPs are also responsible for capital raising. Is that part of what you guys do as well?
Yeah, we also do that, obviously. I mean, we have our investors, people that have been with us for a long time, and we always get new ones for new opportunities. So obviously, I'm wearing also that this hat. Mm-hmm. As I said, we're a small company, so we're juggling
doing it all. Well, I was curious because you're Canadian, and I think your company's based in Canada, if I'm not mistaken, but your properties are in the States. Are most of your investors Canadian or American investors?
It's a mix. So we have both Canadians and US based investors.
Mm-hmm. So a lot of Canadians are interested in investing in multifamily in the States. They just don't know how, or they're scared off by the cross-border double taxation threat, that sort of thing. How do you work with your Canadian investors to get them involved in these American deals?
So, I mean, we're not obviously accountants or tax lawyers.
But you got experience. So put the caveat there, get your own legal and financial advice. Exactly. Cover your butt there, Eliav. Yeah.
Exactly. But, we have the experience. We've done it multiple times. And obviously, it depends if you want to invest through a corporation or personally. There are advantages and disadvantages, to each one of those. It's doable. You can do it without getting penalized on both sides. So you're going to get credited for whatever you paid in the US.
You're going to pay some tax somewhere. You just you're not going to get double whacked.
You got to pay taxes in the US. Mm-hmm. And obviously in Canada, normally the taxes are higher. So you will top up whatever on top of what you paid in the US to get to what you should pay in Canada. But with the right structure, there will be no double taxation.
So, and again, we're not asking for legal advice here, but where does it make sense to do it through a corporation versus personally? What do you typically see that? Where do you see that happening?
So if you're just starting off, I mean, I would say just put it under your name. Mm-hmm. When it starts to get bigger, and you want to maybe get some more liability protection, you want to maybe put it under a corporation. There are different tax structures on both ends, obviously. I
guess one of the challenges I've heard over the years has been that, some people looking to set up the cross-border, corporations and this and that can get horrendously expensive sometimes there. So do you have some certain people that you work with and recommend that don't cost an arm and a leg to get all that stuff set up with?
Yeah, absolutely. Yeah, we've seen that in the past, and we've used services from cross-border accounting firms and law firms. I must say that I wasn't impressed in most cases. Yeah, and we got to work with professionals on both ends, both sides of the border. And they communicate with each other, and you don't have to pay a large cross-border firm for the service. So obviously we work with a U.S. accountant, and we've been working with him for over 15 years now. He's very, very, very reasonable with his pricing. Mm-hmm. And on the Canadian side, I mean, you can use your own accountant. I mean, he knows exactly what the
Canadian side of things.
The Canadian side is looking for, what can be done, what cannot be done. And, if there is a need, he will jump on a call and straight out the lines.
Perfect. Eliav, well, it sounds like things are going well again after a few years hiatus there. You know, sitting on the sidelines, looking at all these deals and analyzing them, and none of them penciled out. Now they're starting to. Where do you see the business going over the next 12 to 18 months?
I think we will see more and more distressed properties. And these are the ones that we're looking for and looking after right now.
Yeah.
People think that interest rates are high. I don't think so. I think that they're exactly where they should be. I don't think they should go lower. And I believe that's
spoiled.
I believe that, we'll see more and more money coming into the market because there are no other good alternatives at this point.
Yeah. Well said. Eliav, if people want to connect with you, what should they do?
Best way would be LinkedIn. Just look me up on LinkedIn and connect, and I'll be happy to give advice or share information and help out if I can. Perfect. And again, that's Eliav Kling. Probably only one of you in Toronto, so that's the one. That's the one.
That's the one. Eliav, it's been great to have you. Thanks so much for being on the show.
Likewise.
All right, everybody, take care. See you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.